How we doing? How we doing? Today is Thursday, July the 25th, 2024. Just coming to you live for our training on seller financing and real estate notes. If you missed the first week, it was on Tuesday. We go Tuesdays and Thursdays. You can go back to my YouTube channel, Abundant Capital Group. You can go on there and look for the tab that says Seller Financing and Real Estate Notes playlist. And you can see last week's Zoom meeting in regards to seller financing. We're talking about this because of where we're at in the market, the shift that's going on in the market, a lot of the forces that are going on in the market because of what's happening with banks on the commercial side of real estate, the higher interest rates for residential real estate, and a lot of the economic factors that are going on when it comes to increasing unemployment and different stresses that the economy has. This is a time where seller financing and real estate notes do well. So we want to try and bring these two strategies to people. Hopefully they can implement them in their real estate strategy that they're doing now or on their portfolio that they have now. If you're a realtor and you're seeing this, you can bring value to your clients. If and when you get in a situation where using seller financing or creating a note could solve the seller's problem, could help out a buyer, and obviously get a commission to you as the realtor. If you're an investor, you may want to, understand this side of real estate and use it in your own portfolio. And if you're a buyer, and that's kind of what we're going to talk about tonight, is if you're a buyer, why buyer seller finance? There's a few different reasons why, and we may start to see, well, I think we're going to start to see more people needing to be able to purchase with seller financing from the buyer side because of what's going on with banks and things of that nature. Because of some of the stresses that's going on the commercial side, I think that lending is starting to contract, and I think that will only continue for the foreseeable future. And so a lot of qualified people who make good income, have a good amount to put down on a home, may have, some issues on their credit, may not get approved by a lot of these lending institutions right now. And then you have some of these other lending institutions that are outside of the qualified mortgage institutions. You have some of these non-qualified institutions that, they have a lot of stress on their books as well. So, just like I said, it's just the factors of the market and where we're at. How long this will last, this particular market, don't know. Everything is cyclical in real estate, but whether we're in an up market or a down market, you can use seller financing and real estate notes to invest or to use, for a property that you may have, and use these strategies to get your desired results. So it's for anyone that's, involved in real estate, no matter who you are, investor, realtor, buyer, or seller. So for today's Zoom, we're going to talk about why buyer seller finance. One of the biggest reasons is that there's no costly loan fees. A lot of times when you go and get qualified by a traditional lending institution or other institutions that may extend a loan to you, there's a lot of fees that go along with it. A lot of times if you're not putting down 20%, you have to pay PMI insurance, and that adds to your payment. Depending on the loan size, you're looking at paying an extra $100 to $300 and possibly $50 or more for that loan insurance. So that affects obviously your overall payment. And right now things are tight, and if you can save an extra $100 to $300 on a loan, that's pretty big right now. So You don't pay anything for points. A lot of times you have to pay origination fees and points up front when you go to a traditional lending institution. There's things like junk fees that are involved in there. So there are a lot of additional costs when you go through, to get qualified by a traditional source or some of these other lending institutions out there. It's less restrictive in terms of the underwriting. When someone is offering you seller financing, it's usually an investor or a private owner, and they're not going to go through the same probably underwriting guidelines that a bank would. Now, if you're doing this correctly, you still want to, as an investor, you still want to make sure that you dot your I's and cross your T's and make sure that, you're putting someone in a home, that's in a good financial position, and not just putting, the first person that comes along into a particular property with seller financing. But you don't have to do some of the same or follow some of the same regulations that a bank has. Like I said, if something does pop up on the credit, maybe from years ago, or something like that, we can be less, what's the word I'm looking for? We don't have to be as restrictive as a bank would be. Also, on the down payment amount, the average down payment amount for buyers on a national average is about 24, almost 25% that a buyer who is buying with seller financing usually puts down. Now, you don't necessarily, have to, get 24 or 25% down, but obviously the more that you get, the better it is for you, the more that the person is invested. So, that is another thing that that happens when it comes to when buyers are seller financing. They usually, have a good amount of money that they can put down on this particular property, and that'll create some safety for the person that is creating the seller financing for them. And like I said, you can be kind of flexible on what you want to take from someone when you're creating the loan. Credit scores. Right now, if you probably, don't have, A1 credit, or close to A1 credit score, probably 680 and above, a lot of times, people that are under that are getting denied for loans. Not to say that you can't have a 620 or 600 credit score and be able to qualify for a loan, but the times that we're in right now and that we're going to go into, banks and lending institutions are going to be very picky as to who they're going to give a loan to. They're going to be looking for individuals that have, the higher credit scores and who can put down a significant amount of money and don't have, things on their credit. So that's another thing that is less restrictive when it comes to a person that is buying with seller financing. Is the credit score. It can be a little bit lower. You can have some things on the credit from the past, or things that are on there that somebody with seller finance is not going to pay as much attention to as a lending institution. Also, proof of income, how you prove your income. A lot of times, banks want you to show 2 years of tax returns. They're wanting to know where the money that you're putting down came from. Now, obviously, we don't want to, when offering seller financing, we don't want to necessarily take drug money or illegal money or something like that. So we want to make sure that, it is coming from a certain place, but, whether it's borrowed, comes from family members and things of that nature, that's fine. You don't have to write letters and do all this other stuff that some lending institutions will make you do to find out where you're getting your down payment from. So, and then how you prove your income as well. A lot of people right now are gig workers, have multiple ways of making money, and banks a lot of times, may not see that as reliable. They may question it. They may, not approve you if, only for 6 months of the year, maybe you're working a side hustle And then maybe you change into another side hustle for the other 6 months of the year, or however you're making your money. It could be, through social media. A lot of people are making money through social media. And sometimes if you can't, go back and show a history of making money a certain way, the banks will deny you. When you're offering seller financing, we're not as restrictive um, in that way as a bank would. Your debt to income ratio. Now they have kind of loosened up on that when it comes to the traditional institutions that do loans, but we want to make sure that this person is not overburdened by their home payment, that if something goes wrong in their life that they won't be able to pay. But so we can look at this a little bit more strategical than a bank. A bank sometimes lets you get up to about 50%, which technically will get you in the home. But if anything does happen, what's going to happen to you? Something, if a life event happens or something like that, and you've spending 50% of your income towards mortgage, that puts you in a bad position if something changes in your life, and you may not be able to make your mortgage payment if something like that happens. So we can, make sure that people are in a good position, that they're not overburdened, that they're in a good place, that they can afford this, particular property. Now, life happens to everybody, and nothing is foolproof, but we want to make sure that we are, putting people in good situations. Also, sometimes people, have a number of properties that they have already. Maybe they have other investment properties where they got loans. And once you get about 4 properties that are financed, it's going to be harder. It becomes harder for you um, to get qualified for, a personal residence or another loan, because people get a little nervous, if you have all that debt that you owe, and they're going to be another person added in that line. A lot of times they don't want to qualify you. So again, when you're a buyer and you're looking to buy on seller financing, a person that is offering seller financing is not as concerned with you, owning multiple properties and having other debt on other properties. Favorable terms. A lot of times, as a buyer, things can be structured to make sure that you can afford, the payment. The interest rate can be adjusted. The amount of months that a loan goes for can be adjusted. So there's a lot of things that, can be structured to make sure that you as the buyer and the seller are both happy with all the terms. So that's another positive thing that buying with seller financing can do. You can go to them and say, hey, if you can get my payment, to this, this is where I'll be good. And then, we can play around with the numbers and make sure that we can get it in a place where it's good for all parties involved. So just checking on my notes here. So, those are the biggest reasons why you want to do the seller financing as a buyer, just depending on your situation. If you are getting declined from a bank, please reach out. If you see this and you're somebody that, got denied by a banking institution, reach out to me. That doesn't mean that you're not qualified to be a homeowner. We may be able to find a situation for you that works for you. And this is all across the country. So if somebody sees this, wherever you are, and you fit into that category, definitely reach out, make a comment, and we can help you possibly find something, in the area that you're in, where someone is offering seller financing. So again, today is not going to, be a long Zoom that we're doing on this, but just wanted to first, we covered, like I said, the sellers, the benefits of selling with seller financing, and why a seller would want to sell with seller financing. And this week we just wanted to cover the buyer, what position is the buyer in that's going to cause them to want to buy with seller financing, and some of the benefits, because seller financing is an amenity. It's like having a automatic garage, or something, a fireplace in a house. It's an amenity when it comes to buying a property, because there are a lot of things that can be structured for the buyer, that make the seller happy, as well as the buyer, to get them into that property. So again, if you are somebody that may have some trouble getting qualified, like a comment, reach out to us if you see this video. If you're an investor and you have a portfolio of properties, you may want to consider looking at seller financing on a property. Getting somebody in there that can pay you every month, and you not have to worry about the property itself and the expenses on the property and the maintenance and the upkeep and everything like that, but still receive the same, if not more, cash flow. If you're a realtor, you have buyers, maybe you were working with a buyer and now they're not qualified. You can definitely reach out to us as well, and we can see about, trying to get the person qualified. Obviously, we'll make sure that, you get some type of fee for doing that. But if someone got declined, someone that that you've been working with, and they're trying to get all their ducks in a row so they can get qualified through a traditional means, we may be able to find them a situation without them having to go through a bank, and make sure that, everything that the bank is requiring for them to get into a property. So again, this is, for, any, one that's coming into real estate, whatever angle you're coming into, investor, buyer, seller, or agent, this type of strategy can help you. And then, like I said, so I covered the seller, the realtor, and investor and buyer. So, if you watch this video, if you have any questions, please post them and we'll get them answered for you. If you want to text or call me, my telephone number is 973-475-8488, or you can email me at investorgmr@yahoo.com. So appreciate everybody that watches this, and hopefully, you want to reach out and have some further conversations. So if you have any questions, we'll get them answered for you. Other than that, we will see you next Tuesday, the following Tuesday. And we're going to talk about the pros and cons. We're going to talk about, what's good and what's bad about seller financing. And, just to give, an equal perspective on things you need to be concerned about, but also the positive things about seller financing. And then, we'll just take it from there. So see everybody next Tuesday. Have a good night.